Right, hello and welcome back to GI Live London. We're continuing to host our Meet to Match meetings today in rooms 7 to 10, just down the corridor. But here now we have a presentation and a fireside chat from Hiro Capital. Spike Laurie from Hiro Capital and Sir Ian Livingstone will chat about angel investing and the differences between that and VC investment. But first up, we've got a little presentation from Ian. So please welcome Sir Ian Livingstone.
Thank you, Jamie. I'm delighted to see everybody here in the flesh. It's quite unusual, but very enjoyable. So I'm going to talk a little bit about how you actually work a remote, which doesn't seem to be working at all.
We'll just wait, get your presentation up. It's coming up. Here we
Okay.
are. There we go. If you want to go back.
I need to go back.
There we are.
So I'm going to talk without being able to look at what I'm doing because it says London Excel on here, but I'll have to look over here. So thank you. I'm here to talk about a little bit about my life in games and some of the problems I had with raising finance in the early days and how you understand the value of intellectual property and how you raise capital at scale, being serious about your business. But you know, I've been in the games industry some 47 years, and from analog world of Games Workshop through book publishing and writing in the 80s, through Fighting Fantasy, and through that moving into video games as chairman of Eidos when we launched Tomb Raider. And when I left Eidos, became an angel investor in some pretty successful mobile companies, including Playdemic, who created Golf Clash, and also Mediatonic with Fall Guys. I was also chairman of Sumo until we exited Tencent earlier this year. And last but not least, I've been a partner in Hiro Capital. So I've moved from being an entrepreneur to an investor. So I know what it's like. I mean, maybe we should understand, I need to understand a little bit about your journeys and what you're looking for today. But for us in the 70s, you know, we started a company called Games Workshop. I'm sure you all heard of it. We sold Dungeons and Dragons originally. We ordered 6 copies of D&D, and on the back of that order we got an exclusive distribution agreement for the whole of Europe because Gary Gygax, who was running TSR Hobbies at the time, was also operating out of his flat in Lake Geneva, Wisconsin. So we're both kind of role-playing businessmen about a role-playing game. And so we go to the bank manager and say, we've got this great game, it's a role-playing game, you kill wizards, you kill monsters, you find treasure, you got these fantastic jewels of the mind. And the bank manager kind of looks at you like a dog watches television, has no understanding whatsoever what you're talking about, and asks you politely to leave. But that lesson from there was that we weren't at all investor ready. We just enthused about our product and just expected the bank managers to give us a lot of money. So whilst we were frustrated that we had to scale up our own business by having to live in a van for 3 months and operating out of cash flow, it was a lesson in life how you have to be investor ready as well as having some skin in the game. But it was a passion project. This was not quite as a van similar to this, or the bank manager similar to this guy. Not the actual ones, but just for kind of visual reference, just to in case you didn't have an imagination. So we opened our first retail store in 1978. If anybody were in that queue, probably not, because you probably weren't born when this opened. But I'm trying to do a kind of photo reenactment of that time. So if you were in that queue, just get in touch later on. And of course, Workshop now, most famous for Warhammer and how we're rebranding all the stores as Warhammer shops. And again, that shows the value of intellectual property. In the video games industry in particular, a lot of companies trade away ownership of their IP in return for working capital project finance. And I think it's so important to move further up the value chain of IP ownership to realize full value of the creativity and the products that you actually created yourselves. So Warhammer obviously underpins the workshop value. We sold out in 91 to a management buyout, and then there was the flotation in 1993. Some might say we sold out a little early because it's now worth 3 billion quid. On the London Stock Exchange, but again, that's another warning to you all that don't sell out too early when somebody sees value in your company without understanding your own value yourself, because chances are you might, with investment, and be able to move much further up the value chain of the ownership of your own company. So blatant self-plug here. I'm just writing a book about the first 10 years, the origin story of Games Workshop, and it's still available on a pledge funding publisher, Unbound. So, as I said, I moved into interactive books. These were books in which you are the hero, and it was through these books that we wrote in the 80s that I moved into the video games industry, because the founders of a startup called Domark, and one of their early employees is actually standing or sitting there in the room because he's that old now. John, raise your hand. There he is. The founders came to me and said, would I write their launch product, which was a game called Eureka, which I did. And rather than taking royalties, I took equity in this startup. And when I sold out of Workshop, I invested more money, rather foolishly at the time, because again, this is another lesson, is timing is really important. The 16-bit market was just about to fall off the edge of a cliff when I put my money into Domark, and realized the company was completely undercapitalized, and we had to kind of make a decision to put 4 companies together to create Nuco Eidos, which we floated on the stock exchange in '95, and of course Eidos most famously known for Tomb Raider, and that came about as us acquiring the only other listed company in the space, Center Gold. So you're all aware of this, of course. It's a $200 billion industry, 3 billion players, huge opportunities. The proposition being changed almost on a daily basis through the advances in technology. We've seen how games have become mass market phenomenon now, pervasive on public transport, technology driving new opportunities, and it's all additive to the total market, whereas in music it's substitutional. The new format of music consumption is usually means that the former one kind of goes away, but in games all the platforms are still existing and they're being added to all the time. We've seen the rise of esports, and now we're talking about the metaverse. Every time there's a new opportunity to make money. There are some 2,000 game studios in the UK. A lot of those are micro studios, but again, it just shows how great this country is at making games for global markets. And games like Grand Theft Auto 5, launched in 2013, generated $1 billion in its first week of revenue. That's bigger than any entertainment franchise and any other entertainment medium. And yet, the perception around games has always been kind of a bit negative in the media in particular, which is it's a shame. We've been firefighting for decades now, but it doesn't help that the media and indeed sometimes the government has never always supported the industry like it should, because that trickles down to parents and guardians and teachers not wanting their children to be involved in the industry, and investors thinking it's a nightmare industry to be in. And yet it ticks all the right boxes for the future digital economy. It's IP creating, it's high tech, high skills, it's regional, it's not reliant on being in London. It's an instant export story every time you launch a new product on whatever digital platform you choose. It reaches a global audience, and it can obviously, the risk profile has moved completely down from being physical products, premium price, navigating the supply chain to often a proposition which is free at the point of delivery and upselling content over time and giving that long tail of revenue over time. So the two main areas that always face the games industry developers is access to talent, hugely competitive market as we know, and access to funding. And it's obviously quite easy to start off in making a game, bootstrapping it, raising money from friends and family. There's some very tax advantageous methods of investing through EIS, Enterprise Investment Scheme, and the Seed Investment Scheme, which was released by the government, being great for investors and for companies who want investment in. Bank loans has always been challenging, as we know, because of the risk profile doesn't fit their business model. And of course, you can get publisher funding, and last but not least, you can get equity funding. Now, a lot of people are kind of worried about equity funding. They think they're kind of giving up control. I said when I sold out of Eidos, I became an angel investor and had some good exits, and I'm still being active in that space. And there's a simple due diligence. I'm sure if any of you are looking for sort of beyond seed stage investment, is that you expect to be grilled like we weren't ready when we started Games Workshop. But obviously the the most important thing when people ask me what about a game is so important, I say gameplay, gameplay, gameplay. Technology and graphics play a vital but nevertheless a supporting role. If the game's not fun to play, it doesn't matter what it looks like and how good the technology is, it's going to be boring and I'm not going to play it. But for me, the most important thing about a studio is the team. There's human capital here. Your assets walk out of the studio every night. And so the senior leadership team of being a managing director on an equal basis with the creative director to enable each other to be good at what they're good at doing. Often the creative directors, if they're running their own business, are doing stuff they shouldn't be doing or can't do very well, and they have limited ambition and they make mistakes and not focusing on what they're good at. And similarly, if the managing director starts making all the choice of products, they're tending to make games that were successful last year or what might be successful next year. So the two cases I stated in Playdemic and Mediatonic, they both had an amazing senior leadership team that empowered each other to be successful. And so it's no coincidence that Golf Clash from Playdemic and Fall Guys from Mediatonic were successful. And of course, all the other things I look at from monetization, data, whether you've actually invested in your own company before you're asking other people to invest. You have to demonstrate that you're prepared to take a risk on backing yourself as well as expecting other people to do so. And then how you have to stay the use of funds. Is it going to be spent on people, on products, or Porsches, basically? And if you think it's the latter, you're not going to be very successful in your fundraising. And this is really to a point that there are so many angel investors in the UK, but there's simply not enough follow-on finance. There's always a trouble, what we can call the area of the gap. There's private equity companies who are willing to do the scale-up programs where the risk has already been taken by the seed investors, the angel investors. And the UK has always over-delivered in content, but has always been underserved by capital. And this is one of the main reasons that I got into the VC space. And we're now 14 people. The three general partners, Luke Alvarez, myself, and Cherry Freeman, were all entrepreneurs, so we know what the pain is when growing a business. And we have another partner here, Spike. Give us a quick wave, Spike, who's a partner in Hiro 2. We raised our first fund about 3 years ago, 115 million pounds, and it's been fully deployed into 22 companies. And the thing about the Hiro team is that it's not just money that we offer. We offer expertise in many verticals, whether it's technology, free-to-play, metaverse, crypto, esports. We have experts at every level of whatever might challenge. So we can offer as much or as little advice and involvement as any investee company might require. And what's the big deal about venture capital? Well, A, we're aligned with the studio. We're not looking to take control. We don't want to, we want to be investing, enable you to realize your own ambition, give you the time to be successful over time, to hire the right people, to get the product right before it's launched, and hopefully give you, as I said right at the beginning, greater rewards from the intellectual property that you might or might not create. And so it gives you the time to be able to get growth at scale over time and accelerate that process and ultimately leads to an exit. So that's really a little bit about Hiro and venture capital. Hiro 2, we're in the process of raising £300 million this time. It's going to be capped at £400 million, and we're going to be offering a lot more seed investment opportunities. Hiro 1 was all around Series A, which is 1 to 3 million, and Series B, 3 to 7 million. And we've had some really good launches quite recently. I don't know if it's on this slide or the next, but maybe we'll talk about this. In the last month, we've helped 3 companies. Happy Volcano launch You Suck at Parking. Snowprint to launch Tacticus, the Warhammer 40k game. Had huge success in a few days, if you have a look at how well that's done. And Polyarc, a Seattle VR company with perhaps one of the most famous games in VR right now, and called Moss, and Moss 2 has just launched very successfully thus far. So if you have any queries about Hiro Capital, you either jump all over Spike, or if he's been beaten to death with inquiries, just drop us an email at hello@hero.capital. And that's it for me. And now we're going to join with Spike, who's going to ask me embarrassing questions, and then you can follow that with your own embarrassing questions. Don't worry, I don't care. I'm too old to care. So whatever you want to say or ask, that's fine with me. Thank you.
Thanks, Ian. That was cool.
You hear that?
You're
Musical chairs.
yeah. Start with the embarrassing questions. Okay, so thank you very much, Ian. That was fantastic. You've obviously had a very illustrious career, gone from entrepreneur to investor. Do you think your entrepreneurial creative background has helped you be a better investor or make better investment decisions?
Yeah, because I've made all the mistakes that people might make, and hopefully you can leverage 47 years of pattern recognition and errors, and hopefully help guide and prevent people from making these, not just fundamental errors, but errors they might not have even thought about, that which they could make. So help their process being a lot more efficient. And of course with the rest of the team to give guidance about games development, monetization, technology, whatever that might be.
As an angel investor, you are making sort of decisions on investment, or based on your personal intuition and your personal experience. When you're investing as an institutional investor, you have a wider team around you and much more work and diligence that goes into that. What are the pros and cons of sort of you as an angel investor by yourself versus investing as Hiro Capital?
Well, the chances are I'm going to make more mistakes on my own, although I'm doing kind of trust in my own judgment, which obviously I've made mistakes as well in that sphere. So to have so many experts at Hiro obviously gives us a much better opportunity of backing the right horses. And as you know, we see thousands of propositions every year, and we have a very strong selective process. So as it passes through the due diligence part, ultimately to get to the investment committee, and hopefully there'll be a consensus of opinion of whether this opportunity is a good one or not. But this is still a risky market. It's a great market. I'm never going to retire. I find it too fascinating. The people in it are amazing. The products that are being created are amazing, and there's an awful lot of opportunity there. But getting back to the question, it's so important that you have the right people on the team to help not just analyze and do the due diligence, but then offer the help out to the studios once we've invested over time, as I said earlier, as much or as little as you want. We're not trying to control, we're just trying to help, because we benefit if the studio benefits. There's no competition. We're not sharing revenues or trying to own IP. We're just going to benefit from the success of that company.
It's very common for founders to do angel investment rounds or friends and family rounds before they go out for institutional funding. Do you think that's integral to someone's success in the industry, or do you think they could skip that angel friends and family stage?
Well, it's all about risk, isn't it? Every time somebody invests in whatever it is, the less risk, apparent risk there is, the better. It makes your decision easier. So if you've managed to de-risk your proposition to make the opportunities feel more attractive and more favorable, you should do that, because A, it gives comfort to the follow-on investor, and B, you'll be able to negotiate a better deal because you have de-risked the proposition. So it's a win-win for both people. Less risk for the investor, more upside for the original.
I think one of the other benefits of angel investment, or and I think we're very fortunate in the UK games industry, the games industry at whole, that there's a lot of people who have been very successful, like yourself, who are happy to sort of pay back some of that success in investment, but also the advisory side as well. Having angels on your board or involved in your business early gives you a sounding board or a opportunity to seek advice that you wouldn't normally get in a vacuum. Is there a sort of sweet spot in the number of angels that you would bring into a round very early, or does it not really matter?
Well, I think if you can keep it, the lower the better. You don't want a complicated cap table, because the follow-on investors are going to say, well, do all these 100 people agree with what we're trying to do, rather than do these 10 people are happy to do what we want to do? So it's less is more in that space, for sure.
It seems like it's easier than ever to raise money for game studios today, and we've certainly seen a lot of especially West Coast game studios raising very large amounts of money at very large valuations. It seems like a very kind of hot space with big valuations. Do you think that's changing as the market conditions change, the macroeconomic market conditions change, or do you think that will continue?
Well, clearly the market has fallen back a bit recently through world events outside of the industry itself. Meanwhile, the industry continues to innovate and expand, and there are still large swathes of the population around globally that are not playing games in the same sort of volume and monetary values as they are in the Western world and Asia, but the whole market will continue to increase. I mean, games speaks to Generation Z. We all know that. The kids of today are bored with linear entertainment. They want interactive entertainment because they want that agency of control. Plus, they want to be linked together with their friends. Hence, the metaverse has become the new platform which everyone's so excited about. But there's an awful lot of dumb money that's gone into some investments, I think, and I don't think Hiro is going to ever be accused of being dumb. We only want to invest in what we see as products and projects that are likely to succeed over time. So I think there has been a lot of money come into the market just because they're seeing the explosion of growth, both visibly with people playing on their mobile phones and economically from seeing the numbers. $200 billion a year industry is going to be attractive to a lot of people as they see traditional industries struggling.
You talk a lot about having skin in the game, and you and Steve lived in a van together.
In winter.
In winter. I mean, that really is, but also passion. You did that as well because you were passionate about what you were building, I assume, right? So do you think having that idea of having skin in the game and being really believing and having passion in your project, they go hand in hand?
If you don't enjoy playing games, there's no point trying to make them, that's for sure. It has been a passion project for me my whole life. I'm never going to retire. I like it too much. And it gives you those lessons. We weren't motivated by money. If you're going to set off on the outset, I'm going to make loads of money, that's, for me, the wrong motivation. Success should be a byproduct of something you do well, but it shouldn't be the original motivating factor.
If anybody has any questions that you'd like to ask Ian, then please put your hand up and he'll look straight away.
Hi, I've already been called the guy with the climate questions already, so I guess I'll lean into that. Investment, especially angel investment, around the whole saving the planet thing is a big can of worms, but narrow it down to games. Do you think it's still too early, is it premature to go after any kind of impact investor angle, or like our games are trying to have something more than just profit in mind as a success metric? Is that something that you could even approach right now, or is investment in games really still at that, like, we're here for the returns, there's not a whole lot of other things in that conversation?
Well, I think the question is how are you able to afford to take the latter approach? I think ideally, we have a very strong CSR policy at Hiro, and we want to do the right thing, and there are certain areas we won't invest in at all. And hopefully over time, as the fund grows, we will be able to not always be dominant, decisions made by strict ROI, but on other factors that are probably for the benefit of all. We should all have that theory in mind, but it comes down to at what stage your fund is at and what stage your organisation at, that you can actually afford to not be so bottom line oriented, of course.
I think there's also, if there are other questions, put your hand up. Otherwise, I'll keep asking Ian the embarrassing questions as we go. What advice, when you talked about timing as well, Ian, and that sometimes you get the timing right, sometimes you get it a bit wrong, but it's sort of, you can never probably get it perfect. When is the right time for someone to think about raising money? Is it when they've had their first idea? Is it when they're sort of, where on that entrepreneur's journey should someone think in earnest and work in earnest to think about raising money?
I think as soon as you feel you have a good proposition and you want to have the runway, especially now, if we're going to a recession and the economy is going to be screwed for the next couple of years, you should be thinking, how am I going to get enough cash in my company to be able to survive the next 2 years. And a lot of entrepreneurs in the UK, and Steve Jackson and I ourselves were similar, that we often feared investment, that someone's going to take over your company and it's going to be the end of the world. And therefore, there's a lot of kind of cottage industry mentality in the UK, that people don't want to scale, they're happy with what they're doing. But in our case, it was 3 years before we opened our first shop. We were doing everything out of cash flow. And we failed at the bang, so we thought, well, that's it. We didn't even think about equity finance at the time. And yet, if you did, obviously you need someone who's going to make sure you're not going to get screwed. And by the way, there's no point in screwing a games company, because you'll get found out over time that the real value, if you think you're being stolen from. So it's really important that you make fair equity propositions to investee companies, because you are partners in this, and therefore you're going to go on a journey for quite some time. It's not about exit in year 2 or something. It's a long journey where hopefully you'll be successful together. But as a minority investor, it's important that we motivate and give you the right skill sets to be able to realize the full ambition and value of your company. But I would say get money in as soon as possible. Some people think they'd rather have 100% of this rather than 50% of that. And that is crazy.
Cool. Got a question here?
Hello. Taking it a bit back to your starting days, I'm a Warhammer fan myself, worked on Mechanicus, and I'm curious, why little figures of men as opposed to any other crazy idea? Like, why did you stick with that one?
Of workshops figures?
Why did you decide to make little tin soldiers?
Well, I think tin soldiers is nothing new. I mean, they've been played for hundreds of years. They were used to be lead, and everybody likes a kind of physical representation of themselves. And when we started off Citadel Miniatures, it was obvious to make characters represent themselves in role-playing game, predominantly D&D, and then the creatures they're going to face. But the whole workshop pivoted completely, mainly because of Brian Ansell, who was running Citadel Miniatures, convinced us that selling single figures is great, but we want to sell lots of figures, so we need units and tabletop battles. So that's one of the reasons why Warhammer came about. First of all, we had a 3-year exclusive distribution agreement with Gary Gygax for D&D, at the end of which you can read all about it in my book, at the end of which he said, I want Games Workshop to merge with TSR Hobbies, with his company. And Steve and I, again, being independent young Brits, said no to that merger proposition. And that's why we had to start creating our own content. So whilst we remain the biggest distributor of D&D, we're no longer the exclusive D&D. So again, ownership of IP is so important to build real value and bigger multiples for your own company. So the miniatures became more and more important part, and as Warhammer came about to replace D&D effectively, as well as a load of Dungeons and Dragons and a load of board games, it was important that Workshop focused on being able to market as many miniatures as possible, because that's where most of the gross profit was made in the figures, as it does today.
We'll finish.
And there was no alternative, because there were no computers that you could play games on, except play by mail, which kind of sucked.
Yeah, that was great. And we made loads of mistakes, but we were making it up as we went along because we didn't have any competition. I mean, when we went to TSR to visit Gen Con in 1976 to sign up all the other fledgling US games companies, I mean, they must have thought, who are these guys? But we were the only guys. I mean, whilst we might look like, faded hippies, we were representing the UK games industry at the time, so we managed to sign up all the industries, all the games companies that were springing up in the States. So we got off to a flying start, but, we made our own luck. We didn't just sit around. We worked every minute of the day.
Jamie is telling us that we've run out of time. I hope that was informative, and Ian, thank you very much for sharing your wisdom with us, as always.
Pleasure.
Off! Brilliant. Thank you to Ian and Spike. That was fantastic, really informative and entertaining as well. So great stuff. In our roundtable, room 5, right now, there is a chat with Curve Games if you want to go and listen to Bobby and get some advice on publishing.